And that's something that Ray Dalio has been saying. He, as you said, the market has gone crazy was something that he was quoted saying.
Right.
And just today, he has placed $1.5 billion in bets in put options.
Hey, what is up, guys? Ray Dalio bets $1.5 billion the stock market is going to fall. In this video, I will try to answer why Ray Dalio is buying put options that will expire in March 2020, and I will expose a secret that Fed does not want you to know.
The news today is all about the economy and what you need to protect yourself. Money goes up, money goes down, right? But usually the big guys, the really big guys, they hardly feel it. Well, guess what? There's news today that some of them, well, they're feeling it. I want to take you through some numbers to show you what I mean. The average earnings for everybody who drew a salary in America in 1979 was $46,000, right? See it right there? Well, the average earnings for everybody who drew a salary almost 40 years later, 2018 now, the year 2018, $48,000. $2,000 increase over 40 years. That's pretty sad, right? Especially when you consider that the economy in the United States has tripled in size. So who do you think is really walking away with a disproportionate amount of the proceeds from that economy? The investor class, and none more than the really big guys, the guys who control hedge funds, for example. Hedge funds have been burning it up since the 1990s without fail. Hardly a bump on the road, even during the meltdown. But now we're hearing and we're seeing what may be the fall of the titans. Here's the news. Hedge funds are getting out of the market. That's right. Some of the biggest in the entire world are slowing down or even shutting down and saying there's something about this economy that just isn't right. We're going to begin with news about what some call an impending economic slowdown, recession, or worse. This time, though, the news is not about numbers. It's about names. I'm going to give you some of them. Ready? Jeffrey Vinnick, John Paulson, Leon Cooperman, Ray Dalio, Louis Bacon. They're not presidents. They're not famous politicians. They're not sports figures. They're not celebrities. But they're probably more powerful than all of those. They own some of the biggest hedge funds in the entire world, and they are signaling on this day that there's just something not right about the investment climate that's going on around the world. Boom Bust host Christy I has been following this trend for us. She comes from the world with experience on Wall Street and specifically with hedge funds, and she's good enough to share some of her wisdom with us. So, Christy, what are these guys collectively saying to us?
Absolutely. We have consumer debt level at all-time highs, and we have corporate debt at all-time high. 40% of those corporate debt are actually at risk of default if there is a significant slowdown in the economy. And that's something that Ray Dalio has been saying. He, as you said, the market has gone crazy was something that he was quoted saying.
Right.
And just today, he has placed $1.5 billion in bets in put options with a notional of $100 billion.
What does that mean?
Saying that he's
betting against the market?
Against the market, that by March of next year, if the market goes down, he'll make money. He's betting against the market, saying that we are at risk of a major fallout.
I guess this is no longer a big secret that economic slowdown is upon us. Ray Dalio made a decent profit in 2008 housing bubble and global financial crisis. 11 years later, after the longest economic growth in the history, Ray Dalio is betting once again that market will suffer. Recently, he purchased $1.5 billion worth of put options, which will expire in March 2020. But the question is, why is he doing that? Let's take a look what those CNBC financial analysts and reporters have to say why Ray Dalio is betting against the market. Then I will explain why I believe he is betting against the market.
This morning's the Wall Street Journal reports that Ray Dalio's hedge fund Bridgewater is using put options to bet more than $1 billion that global markets will fall by March. Sources tell the Journal's Bridgewater bearish bet is currently one of the largest against the markets, and that it'll pay off if the S&P 500, the Euro Stocks 50, or both see a decline. Joining us now to talk more about the markets, Sarat Sethi, managing partner at Douglas C. Lane and Associates and a CNBC contributor, and CNBC senior markets commentator Mike Santoli. I was reminded of a couple of things, Mike, and that was Soros's bearish bets over the years with S&P puts that never worked out. He lost on every one of them. And then another guy who loved to deal in puts named Buffett, who didn't buy puts.
Yeah.
He sold billions of dollars worth
Sure.
of puts and added so much to his return based on that. Just when you sell puts, you're just betting that the market's going to continue to rise.
Sure.
So we seem to say how high every time Dalio's on the way up. Every time Dalio makes a move, I don't know what the.
I mean, the first thing to say is that the report kind of lacks context. You don't know where this position fits within the constellation of all the other things that the firm is doing. It's not a bet the firm trade on the market going down in an outright way. So I think that you have to point out. But I do think it reflects some sort of general activity among big institutions saying, puts are cheap right now. We might as well lock some in. It's been a big up year. And there is actually, if you look at some, if you can look at sort of the slope of hedging activity going out several months, there is this welling up of concern that's concentrated around early March, which is Super Tuesday, which is when somehow people think that's when election outcomes are going to be relevant for the market.
Well, they believe it's not a big deal. Dalio uses a small portion of his portfolio to bet against the market. Basically, he's hedging against his own portfolio. However, I dig much deeper than that, and I want you to see this. Let's take a look at this chart that represents effective federal fund rates. These gray bars are indicators that represent recession. They are lagging indicators. By definition, it requires 2 consecutive quarters of negative economic growth to see a recession, which means GDP does not necessarily have to go down, but what it has to happen is to have a suppressed growth rate of GDP. If in 2 consecutive quarters GDP growth will be slower than it projected, then it might be a good indicator that we are in the recession. After that, Fed has to compile all that data, which takes at least 6 months and up to a year to do so. Therefore, we do not find out that we are in the recession until after that time. This video is brought to you by betmatch.io. Betmatch is a betting website that is based on a private blockchain which was essentially created on Ethereum ERC20 token. It is very transparent and verifiable. This platform actually uses Ethereum smart contracts, so it is very transparent. If you click on liquidity pool, we can see how much cryptocurrencies they currently have. They have 20 Bitcoin, 163 LTC, 48 Ethereum, and that's their own cryptocurrency XBM. It is verifiable. If you would like to check, you can check their address. So it shows that they currently have 48 ETH. If you click on entering, they basically shows what entering. They describes their blockchain, their advantages, what is entering, and their advantages compared to their competitors. Let's go back to the home screen and see what else we can find here. So personally, they have a number of different events like casino, sports, esports, live tournaments. If you would like to place a bet right now, you don't have to wait until your favorite team is going to play. But personally, I'm very interested in football, which is aka soccer and UFC. If you would like to place a bet on your favorite fighter, you just click on UFC, click event, click on the event where you would like to place a bet on. For example, UFC 245, which would happen in December 15, 2019. Click on it, and then main event, we have current champion Kamaru Usman versus Colby Covington. That's going to be a brutal fight. Personally, I believe that Colby Covington is going to win. So if you would like to place a bet on Covington, which is I already have, so our max is currently 0.55 ETH and your reward would be 3 ETH. Basically, if you are correct, you would win 6 times your money. So this is about it. If you guys would like to sign up, you can use the link in the description box below. If you use that link, you can take up to 2x on the first 3 deposits after registration. Let's take a look what exactly happened in the recent history when Fed started cutting interest rates. Let's go back all the way to dot-com bubble, which happened in 2000s. Between June and November 2000, interest rates were at 6.5%. 1 month later, in December 2000, Fed started cutting interest rates. 2 months later, by February 2001, they cut interest rate by 1%, from 6.5% to 5.5%. This is when recession started. If you look at S&P 500, it was almost at the peak. The all-time high for S&P 500 was $1,500. When it dropped by 100 points, that is only 6% from its all-time high. When we hit $1,400, we were already in the recession. However, general public found out that we were in the recession at least 7 months later. Why 7 months, you may ask? Well, because first we need to see 6 months of suppressed GDP growth, then we need some time until Fed piles up all that data and makes it public. 7 months later, rates were dropped all the way to 2% or so, and S&P 500 dropped all the way to $1,000, which is 33% decline. Only after that drop, public found out that we were in the recession. Of course, Fed continued to cut rates until 1%, and S&P 500 continued to drop all the way to $750 a share, which means we dropped by 50%. Now, let's take a look what happened in 2008 housing bubble and global financial crisis. At July 2007, we were at the peak of the market. S&P 500 was at $1,500 a share once again. And guess what? During the same time frame, at July 2007, rates were at the peak, which was 5.3%. Since then, Fed started cutting rates. By December 2007, when rates dropped to 4%, we were already into recession. However, we were still at all-time high levels. S&P 500 still was at $1,500 a share. 7 months later, by July 2008, when interest rate dropped to 1% and S&P 500 dropped to $900, or 40% from its all-time high, this is the time when public found out that we were in the recession once again. Since then, market declined additional 200 points and Fed dropped rates to 0% to stimulate another economic cycle. So what does all this mean and how can we apply it to the current economy? Since 2008, we had the longest economic expansion in the history, mainly because of the low interest rates and QE. In June 2019, we were at the peak of the Fed fund rates, which was only at 2.4%. Yes, I know, Fed waited too long to start increasing rates in the first place. As of November 2019, we are at 1.5% of the Fed fund rates, while stock market is at new all-time high. If and only if we are in the recession, we won't find out at least 7 months later from the top of the rate hikes, which would be January 2020. However, when recession will be declared to public, we are still going to be in the recession for a number of months or longer. So approximately in March 2020, Ray Dalio can cover and exercise his put option. By that time, interest rates might be at 0% and stock market significantly lower. Tell me if it's not coincidence that Ray Dalio bought $1.5 billion worth of put options which will expire at March 2020. If you do not know what that means, it means that Ray Dalio is betting against the stock market and he believes it will be lower than it is today by March 2020. This is the guy who profited greatly from stupidness and greed by bankers in 2008 housing bubble crash. I don't know, you may call me crazy, but puzzles seems to fit in. Let me know what you guys think about Ray Dalio and next economic recession. Are we already in the recession? Leave your thoughts in the comment section below, hit that like button and subscribe.